So let's wait for 1 or 2 minutes. Yeah, how to use Google Hangouts, fantastic. So as I was going through the general financial product advice, this is only educational in nature, and trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. So I'll give you 20 more seconds to go through the slide before we resume our technical discussion. Fantastic. As you have gone through this general financial product advice, what we will do, we will new year, but nothing new in the trading though, because trading is it will be the same as I was always say. Trading is same for last 10 almost hundreds of years, and trading will be the same next hundreds of years. So there nothing new. If someone has said, someone is saying, I know every minute, every second they say we have invented something. Well, that is actually not correct, because it is impossible to invent a new human characteristics apart from greed and fear, which are being inbuilt in us for last, I think, 220,000 years. Yeah, so our limbic brain is as good or bad as 220,000 years, and we are still carrying the characteristics of that age old brain. So it will not change, it will never change. So we'll start the most people, what they do, they circulate the old wine in the new bottle, but we say it's the same oil in the same wine in the same bottle, so we don't recirculate. One other that is one thing, and the other thing is the important thing which we need to understand or remember is, I have seen, my observation is human being as such, not like fish, who are having 3 seconds memory and it is gone. After that, human being actually, although we are said, we that that the potential of the human brain is too unbelievable, probably unlimited. But having said that, I have never seen, or probably we never seen anyone using anything more than 12%, which or 14%, which Einstein did. So Einstein, we all know. So having said that, what I am trying to say is, as human being we tend to forget, and we will forget, and we forget things. The more we do not practice things to remember, the more we forget. So what we will do, to cut it short, we will start with, of course, I can start with all your questions, unless and until you are typing in the message box the questions. What we will do, we'll just quickly go through the basic understanding of where to start, and how to start, even if it is a simple chart in front of us, which is nothing but a daily chart. Yeah, so this is, as you can see, this is a daily chart in front of us. We are using a daily chart, and we can use anything. For example, we can use 188, or so on and so forth. For example, like this, we can use any numbers depending on the size of your screen. So you can use 88 and so on and so forth. Yeah, you can use anything, whatever suits you. So my favorite number is 108, so I'll do that, and probably we'll get started with this. You can start with monthly, weekly, doesn't matter, as long it is a instrument. And this is, in this instrument, as you can see in the top left hand corner, this is GBP USD. As long this is an instrument, doesn't matter which um, exchange it is, doesn't matter what is the last value, doesn't matter what is the name or the ticker, whether it is currencies or futures or commodities or shares or bonds or indices, doesn't matter. As long as it is an instrument, tradable instrument, and our broker is providing opportunity to trade, the characteristics of the chart will be the same. So in front of us, we are having GBP USD, and this I is important. Although I don't know how many of you have so far clicked on this I. This I is information, and this will give you what is the ticker. It says Great Britain pound against United States dollar, and trading hours is GMT 00200, and time zone is UTC Universal Time plus 0, that is London Greenwich Mean Time. Universal, as of now, Universal time and Greenwich GMT is actually same. And what is the character? What is the type of this instrument? It is Forex, and tick size is 0.0001. They go up to 5 decimal place, as you can see, 130.798. So after the decimal, there are 5 places, 30798. That's why they say tick size is 1 point double not 1, and the currency is United States because the term currency, as I told you that I will go through quickly the all the basic elements what we are what we have been taught in NP Financial for so long, quickly, so that you don't have to you can, of course, you can go back and read the manual which is with you and which will be with you, so you can go back and read the instruction based discussions in your members portal, and you can go to the Trader Foundation course. So just to shorten that, what I'll be discussing, I'll be discussing the entire thing. So for example, the term currency is United States dollar. That's why you can see the currency is in USD. So the profit and loss, the chart which you are seeing is the Great Britain pound, GBP. First two letters country name, and the third letter is the currency name. So GB is in Great Britain, P pound, and the base, that is the base currency, and we are seeing the chart of the base currency, and base currency is always 1, and USD is the term currency here. That means what the profit and loss in any trade of this currency will be calculated in United States dollar and will be converted by the PEEP cost to AUD if your account is in AUD, or New Zealand dollar. For Selvan, it will be New Zealand dollar. It will be converted into New Zealand dollar according to the PEEP cost. So what does it mean? 1.3079 means 1 Great Britain pound, because GBP is always 1, because this is base currency. Base currency is always 1. So 1 Great Britain pound is equal to $1.30 in United States, roughly, yeah, 79 if we ignore the third and fourth decimal places. And also it is important to know that what is the time zone here. What is the time zone here? It is important that, and this is also important, hidden weekend data hidden. Yeah. So what does it mean? And they also give some tips you can read to check trading hours and other information. Check the intraday chart of this instrument of the past few days. Yeah, you can do that, or what you can do, you can go to options and then go to platform options, and then you can go to time zones. And since we remember from the I that it was Forex, so, and that means Forex means currencies, so we'll go currencies mini, and we do not tick this data, display weekend data, and also this mini, we don't use this display weekend data. So for example, if we change to for example, if we go to for example, let's go to ASX, which is an instrument on the index front. So what does it say in the I? It says futures. Yeah, so it says futures. So either you can know through this I, which is the information tag, the type of the instrument, or what you can do, you can actually go to the list. This is display by display list, and it will be, yeah, display list, and you can maximize this. And here what you can do is actually you can bring this by clicking on this spanner. The spanners are actually important, this spanners and that spanner. So let's click on the top left hand spanner, and you can see the exchange. Yeah, so if you click the exchange, you will know what instrument belongs to what exchange. For example, this oil here, CL, which is the oil here, CL is the crude oil, Of course you can bring the name. So if you go to that one and bring the name here, it will tell you the oil which was here. Oil, it will tell the US crude oil, and you can bring this name here. See this, I am bringing the name. You can place this name first, for example US crude oil, and then what is the ticker for the US crude oil for in this broker platform? It is CL. And what is the exchange here? CF future CFDA. So this is one another way to know what is what, or the easy way is to click on this I here. So that being said, we similarly we can go to for example, if we go to rough rice, as you know, so that will tell you this rough rice is actually futures. Either we use, so for example, if you do Cochlear or CSL, CSL, which is an Australian shares which we trade, that in here we'll say that this is a stock. Yeah, so this is a stock. This ISIN is not so important. It is the international standard identification number. It's not important, but important things here is the type and the time zone. These are the two things which are extremely important, the type and the so we discussed in last 10 minutes the base currency, the term currency, and the type of the instrument we are using, what exchange it belongs to, and what are the time settings. All right, so these are extremely basic concept. I talked about the charts are shown in base currency and term currency, so on and so forth. Extremely basics, as we know from our understanding here in the instruction based discussion. If you go to basics of trading, so it will all be covered what I told. Do you have any question? Please I just speak. Okay, so yeah, Bankim says no, was Lisha says no. Okay, brilliant. Okay, fantastic. Okay, so if you are clear about the basics, fantastic. So this is a currency, as we know, GBP, Great Britain pound, again United States dollar. So where to start? So whether do you have to start here to make it, for example, if we make it 11111, it will be going to that much. And it do you have to start this year in 1974, or do you have to start in only 2019, or where do we start, so my understanding is don't go so far, it will be crazy. So favorite selection according to your screen size. If you are using a 17-inch screen, so 108, or if you are using a smaller one, 88 units, so you can select this X units from here. If you fix it, it will be 200 units, for example. Don't fix it. So what I do, I prefer units, and then I can change this or type in as I am demonstrating. Yeah, so let's start this, because I am having a 25 inch screen here, uh, and I am selecting 108. So where to start? So no, it doesn't matter which instrument, whether it is GBP, USD, or Euro, Aussie, or EuroCAD, or GBP. It doesn't matter. I never change these units, because if I do not change the units, then the reference point of my understanding over all the asset classes, shares, stocks, bonds, indices, commodities, forex, cryptocurrencies, will be the same. So I am seeing this time frame or the number of units actually the same. So another way to verify the number of units is, you can go here on the scale. You can click on the scale, and if you go to the last one, and sorry, the first one, and it will tell you 107, because it is not including the one you have selected. So it is 107 plus 1, which is 108. So make sure that this one here is actually clicked. The third icon at the bottom right hand corner is actually clicked. Otherwise, what is some people do, they do this, they do this, they do this, and they do this, and and actually everything is messed around. So the best way to go back to the normal, or restoring the default, is click on the third 1 2 3 or 1 2, second from the left and third from the right. On the right hand bottom corner, click on this icon, so it will actually set this to 108 units, because that's what we are asking to the computer to show us 108 units. Alright, so this is a chart, doesn't matter what is the name. So where do I start? For example, if I see this chart for maybe 1 second, I will start from here, because I will say to myself, this was a double bottom. So for a reference point, we start from here. In this, every chart will be different. In this chart, what we are seeing, this is a double bottom here, so we can start here, and then we can say, all right, we know the concepts of U, D, up bar, down bar. When I am talking about bar, you can actually go to settings by right clicking, and then you go to bar chart. You can do this bar chart as well, doesn't matter. So whether you are if your favorite is bar or candles, it is up to you. So let's stick onto this bar chart. I'll change to candles if we want to. Okay. So if we start from here, then our first concept of P and T, we can actually scroll down a little bit to see what was the trend, why it was double bottom, whether the characteristics of the double bottom is actually fulfilled or not. Then we'll spend another 2-3 seconds to say yes, because that was a double top here on 13th of March, and after that, what is happening? The peaks and the peaks are coming down, and the troughs are coming down. So the peaks are coming down, and of course you can mark more, 1 2 3 4, so on and so forth, but I'm just quickly demonstrating that the peaks are coming down and the troughs are coming down, or the swing highs are coming down and the swing lows are coming down. That's why it was a downtrend. And the prerequisite of a pattern, now I'm discussing the prerequisite of a pattern. The prerequisite of a pattern is, can anyone tell what is the prerequisites of pattern which is there? Please write down. Please write down your message. What is the what are the prerequisites of a pattern? Quickly. Yeah, and so yeah, Bankim says it has to appear at the right hand side. So yeah, so if we if we do this on the 108 charts, and then we go to the left, exactly correct, as Bankim said, it has to appear at the right and bottom corner of the screen. That's fantastic. That is one prerequisite. What are the other prerequisites? For example, double bottom. What are the prerequisites of a double bottom? Please try. As I already said, that human beings are prone to I don't know whether they are prone to forgiveness, but they are definitely forgetful. Okay. All right. So yeah, so if you are not it is not coming to your mind, I'll give 20 seconds more. Because it is a double bottom, that means it is trying to reverse uptrending market. So the prerequisites prior to the double bottom should be yes, Lisha says second drop lower than the first drop. Yeah, that is actually not the prerequisite. That's the definition. Yeah, of course it is an element, but yeah, the element, as you said, is correct, and that element is the second drop, like this one here. The second one here should be lower than the second one here. Should be lower than the first one here. The first swing high, or the or swing low. Yeah, first swing low, second swing low. We must have two swing lows, and what else? Yeah, go. Yeah, Selvan is saying double bottom must come after yes, after a downtrend. Yeah, break the last peak. Yeah, fantastic. I'm getting all of your answers. Fantastic, brilliant. Sylvan says double bottom must come after a downtrend. Yes, so that is what is important. it must come after a downtrend. So this is a downtrend. As we can see, this is a downtrend. I'll make that downtrend in yellow because the peaks and the drops are coming down. Yeah, so must come after a downturn, as yes, that is good, fantastic, brilliant, and it must appear at the bottom right hand corner, as you said, perfectly right. And the definition and the definition is, and another thing which can be meaningful is it should appear as a support, as a demand supply point. It should appear at a demand supply point. And I don't think another yeah. So as if you can see in the module 2 unit 1, just to show you, page number 7, page number 7, as you can see, the characteristic of a double bottom, it should appear after a downtrend, as you said correctly, and it should appear at the bottom right hand corner of the chart, as you correctly said. And also you said that the second bottom should be lower than the first one, that is class A. Fantastic. So you remember everything, so you are above average human beings because you remember everything. That's fantastic. All right, so we have started from there. All right, okay, so this is a good point to start. And then what is the next point? We okay, although okay, we have started here, then then what? We have started here, then what? Yep. uh, so next is we need to remember, we need to start seeing the principles of trend. And what is the definition of a trend? Anyone quickly, definition of uptrend in this case, because we are going double bottom. What is the definition of uptrend? The higher yeah, as Bunkim said, is correctly higher highs and higher lows. I do a little bit technical on that. Higher swing highs and higher swing lows. Yeah, because if you say only higher high and higher low, then I would say then it is first term, like this one is a higher high, higher high. Let me correctly change this configuration. So let me make it yellow and width fifth. Yeah, so then in that case it will be, if you say only higher high, then in this case these are higher highs and higher lows. And so yeah, that you are correct, but that is the first term. Yeah, that is the first term. So we are discussing first term, second term, third term trend, or immediate and medium term and long term trend. So better to say higher swing highs and higher swing low. Yeah, so higher swing highs and higher swing lows. So what you need, this is swing low. So this will be only double bottom a pattern. And if the definition is correct, as Lisha said, the second low should be lower than the first swing low. That is correct. But in between there should be a swing high. Yeah, in between there can be many swing highs, like this one, this one, this one, but at least there will be one swing high between the swing low. So let's consider this as the highest point swing high, in between swing high, in between swing high. So we have identified this. Then we are looking for to break this one, because unless and until this is broken, the trend cannot be started. It can go there and reverse back. So 123.10, this is coming from this segment. And you may ask, how do I get the price? If you right click and go to the configure horizontal segment, then what you have to do, you have to do display price. You have to do display price here, display price here, and you can change the color, for example like this one. And you can set default display price, and you can do right justified or left justified. I prefer left justified. So the default is left justified. So 123.10 is this swing high in between. So unless and until this is broken, then this downtrend which was prevailing for so many weeks, days and months together will not be getting started, will not be reversed. So what we are looking for, we are looking for this swing high to be broken now. So I'll just write down so that you remember. So what what looking for to start with, to start we are looking for maybe a reversal pattern. So unless and until we, or a continuation, reversal or continuation pattern, whatever it is, I'll show you everything. Continuation pattern, but we have started in this example reversal pattern, which is a double bottom. And then make sure that the prerequisites are correct. Prerequisites prerequisites uh, prerequisites are correct. Make sure, you have to make sure that. And the third thing is definition is correct, so that is important. Definition is correct, that is most important. That means for a double bottom, the second low A class, the second low should be lower than the B class second low should be, it can be equal to the first low. So the definition should be correct. And the fourth one is breakout, because this is a reversal pattern, either this is a bounce or a breakout. So in this example we are looking for continuation, it will be bounce. So let's see breakout. For example, in this example it is breakout. And breakout is equal to what in this case? It should break out the 123.10, that is swing high. What is the breakout concept here in our NP Financials? Is close above swing high. For example, in this case swing high and high taken out. Close above swing high, close above swing high, and high taken out. Yeah, high taken out. All right, so now we are in the fourth concept. We have seen that this is a reversal pattern, double bottom. We have made sure through your understanding that the prerequisites are correct. From your understanding, we have made sure that the definition of the pattern is correct. Now we are looking for the breakout, close above high, swing high, and high taken out. So this is the swing high 123.10. Let's see, let's go one by one. Yes, so this has close above. This is fantastic. So this close above is satisfied by this bar, because this close is equal to 123.28, which is more than 123.10. So the swing high was 123.10, so we are looking for a close above, which indeed it did. So 23.28 is greater than 23.10, so it has closed above. And last point is a high taken out. That means this high has to be taken out, and the high here is 123.54. We have to wait for the next one, not yet taken. So in the meantime, what we will do, we will calculate, mathematically calculate the pattern opportunity. For example, where is the, like it is written here, mathematically define the pattern. So let's define the pattern. I'm only referring just to make sure that you remember. So for example, from this swing high to this one here, it is 333 pips roughly. So what we do, we take this vertical segments. How to bring these segments? Those of you who wants to bring these segments, either you can bring through these lines, but that will be one off, or go through options and platform options and go to template options in this case, and then go to main window. So I repeat again, options, template options, and main window. And the main window you select segment, vertical segment and horizontal segment. These three segments are very important to draw the pattern. So what we are doing, we are taking advantage of this vertical segment. And if I am moving fast, please let me know. If you have a question, please either talk back or write in the message box. So what we will do, we'll drop a vertical line from here to there. So we have dropped. Display date is not required. So we'll make it dot dot. So we have made that vertical line, and now we are mathematically defining, because there is a possibility of a breakout. It has not broken out, but there is a possibility of a breakout. So what we do, this is our pre-market analysis or pre-trade analysis. So we take this, make a copy, this is the tool for copy, and then it has broken this. So this is the starting point. So 123.10 is the starting point, and roughly we would stop here, which is 126.44, if our target is reached here, yeah, at 126.44. Let's see. So high is not taken out, so you're waiting for um, order. If of course our signals will come. Otherwise, if we are just starting the we have just completed the trader foundation course. So now we'll be placing an order at high, which is 123.54 plus 10, because daily chart. So 123.64. So this one is actually crossing the 123.64. So we are in the trade. Yep. So this way actually, and we hit the target here. We hit the target here. Yeah. Don't get panic here. If we are getting panicked here and closing the trade, then there is a mistake. So this way we can actually start identification. So that is one way. So we achieved the target and price went up more. So how many times it went up, you can actually take advantage of that one. So it has gone up from here to here, and again draw a line. That was the second target. That is the second target, 183. First target 126.42. Second target same length. I'm just copying pasting, and the third again copying and pasting here, and the third target was here, which is 133.12, and so on and so forth. 133.12 and 54, and it did not reach the fourth target. Yeah. So this is one way to get started. The another way to get started, okay, about this one way, which is identification of a pattern and taking it forward from there. I have completed one way to get started in the new year, reading the chart. So do you have any question of this one way which I discussed in last 20 minutes? If everything clear, is a fine. Or if you have anything to, if you want to ask anything, please ask. If you want to write down, you can write down, so on and so forth. Yep, it's fine. Fantastic, brilliant. Okay, so this is one way to start. The other way to start is delete everything. Okay, I don't know, I have forgotten everything about patterns. I don't know what is a pattern. So other thing what you can do is right click on this chart, and then go to settings, price, and then add indicator, and add indicator, scroll down. In your case it will be limited number of indicators, but moving average, and make sure that it is exponential 200, exponential 200, and close. Yeah, this makes you, and this is uptrend is green, and downtrend is red, and so on and so forth. Yeah, this is the so we have downtrend up to this point, and if we are using a 200 period exponential moving average on close, the chart would look like this. So if you remember, our initial target was, if we draw this, our initial target before the moving average, actually our initial target was here at around 126.48. The disadvantage of having a moving average here is the moving average came after our first target is hit. So the pattern formation is the best one, and even if without the double bottom pattern formation, which is second, the first one I would prefer and ask you to practice is the I think the candlesticks. So if you have not forgotten candlesticks, yeah, So if you remember, if you are a master, or if you are trying to master the candlestick pattern, and you saw this one, you'll immediately jump into the understanding that this was a harami here, this was a harami here, and this is a hammer here. So this is a hammer here, am I correct? And this is a 3. So this is a harami. This two, this last two, the last two, you can say harami as well as hammer. Hammer should not have the wicks, but the lower wicks is very good. That's why we say it is a hammer. And if I go to the third one, so either we can place a trade here at 121.03 with a stop loss low minus 10, 119.64 if you are a follower of a candlesticks. That's why we give everything in the instruction based discussion: candlestick, Fibonacci, strategies, indicators, and so on and so forth, and patterns, so on and so forth. So either you enter here, or if you wait for the confirmation. So what is the confirmation here with the 3 bar or the 3 candle? Please write it down. Last 3, I'm not talking about the last 3. Yep, Morningstar. Lisa says Morningstar, fantastic, brilliant, very good. So either we can start from the hammer or from the Morningstar. So the primary reversal pattern to start with can be candlesticks, then pattern, and then we can have a moving average. So let's take advantage of a moving average and continue our discussion, and we'll take advantage of moving average and continue our discussion. Now we have a 200 period moving average, and then we see this. Okay, this is for the first time after this many bars. From here it broke, and now it is trying to break. So in between there are, from here, close below low taken out, close below low taken out to this point, close above high not taken out, 113 bars, 113 bars, 113 days is this trying to reverse on the moving average, although the reversal have started from here. This reversal of a harami was not a much success, although 100% success, 100% in the value was successful, but it came down again. But this hammer was a success, and the double bottom was a success. So double hammer, and then morning star, and then double bottom, we got all 3 success. And then we are looking for a opportunity in the 200 moving average. So what we are seeing here, the 200 period moving average, the price bar has closed above. So closed above, so this fellow has actually closed above. So only other thing which is closed above, so, and the other thing which is required is high taken out here. So what we need to do, we need to wait. So this bar did not take the high of this bar. So if you are following 200, then that's not a trend, but we are entering here at the uh, at this when the close above one bar and the high taken out another bar. Okay, so we are entering there, and rest is history. So this is another way, to see the chart, and to get started. So the best way to get started is a possible reversal identification through candlesticks. The second one is through the patterns, and the third one is through moving average. Okay, so all good, and we have started here. We have started from here, now we are here. So that is fantastic. This is the starting point. Yeah, this is the starting point, and then market. All right, now I'll be interested to ask you how to trade after this, all this happens. So after 200 is the last confirmation, the confirmation happened here, and after that, from that 200 close above and high taken out till this point, how to trade. Yep, how to we are not looking for trade, we are looking for to understand, how to understand the market. Yep. So one way to understand the market again is if it is above. Okay, so do you have any question of the market reversals through candlesticks, patterns, and 200 or 200? No? If not, okay, then fantastic. We'll say how after that identification, how to actually interpret this market. All right. So to interpret this market, we can either say as long as it is above 200, it is uptrend, or we can say if the up bar, if there are more up bars than the down bars, then it is a short term uptrend. If the P's or the swing highs, if the swing highs are going up, so that was the last swing high here, and we had to wait till this point, yeah, because that was the last swing high here, and this swing lows, and it is a hodgepodge here. It is a pentagon. Yeah. So if you can join this, yeah, if you can join this, so this is a very bad structure. There is no bad name to this structure, but one thing is sure that we have to wait up to this point to take advantage of our second term trend, which is the P going up, the peaks going up, and the trends going up, and the drops going up. So the peaks are drops and going up. So that is number 2. And number 3, some people prefer to throw another moving average, and they throw multiple moving averages. It is very lagging indicator, but they prefer something like 50 moving average, and they say as long as the 50 is above the 200, that's an uptrend, and so on and so forth. But I don't like it. So what I will do, I will delete this, and since we already know this is uptrend, we will delete this. And we need to only remember that the everything happened here. The first double bottom 100% return was here, the morning star return was here, 200 close above was here, everything was here. After that, what to do, the best way to trade, understand this or trade this market is, of course, through our strategy, that the indications will come here, and those indications which we discuss in the 4-hour trading model, 12-hour trading model, and 48-hour trading model. But we need to understand that all those trading models, like all these trading models here, whatever is there, 4-hour, 12-hour, and 24 hours, 48 hours, and commodity, all these things are actually based on what we are discussing here. All right. So what I would do, I take this advantage of this, since the peaks are not going up, since the peaks from this point, since the peaks has not gone up till this point, what how to take advantage of this is, as these drops started going up, because this was the first drop which came down, then it started going up. So this came down and then it started going up. Take advantage of the peak or the drops which are going up from there. So for example, this was the drop which came down, and then this is the drops which is going up. So or the swing highs. So what you do, you can keep this, not a problem, you can keep it here. So you join the drops which are started to going up, because at least if the peaks are not going up, or the swing high is static, if the swing high is static, at least the drops or the swing lows have started going up, like this one here gone up, like this one here gone up. So join that line on the swing lows, which is going up, like this. Okay, so let's do that. So we join this one, and just to make sure that you can see that, and not too many greens out there, we can change the color. Yeah. Okay. So once we have joined the first swing low, which is higher than this swing low, so this swing low, as you can see, this swing low is higher than this swing low, we join this. Yeah, of course we have to wait for this bar for this to declare as a swing low. We'll not join this because this is lower swing low, so we'll join here. Then look for opportunity either to break this swing high, or bounce. So as we say, price can only do breakout and bounce. So either you are looking for a bounce from this line in future, because this is kind of all sellers out, and swing low, and then this is we are either a bounce from this trend line, because this is swing low, and in between swing high is there, or a break of the previous swing peak, or so the break of this peak would be a breakout, and the bounce would be from this line swing trend. Let's see what happens. So this is the bounce here. So if you are trying, if your endeavor is to go for a if your endeavor to become a professional trader, what you need to do, you need to actually place the trade at this point, place the trade, or at the where, if you're observing, if you're lucky, if your time reach, you can actually observe the market. You are observing the open here at around 11 o'clock. Observe the market here on 27th November. Open here is 128.60, and we have the line 128.39. We are observing what the 128.39, 128. I write it down. 128.39.6 on 27th of November. Around this point, you can place a trade if you are watching the market. I know many of people are having the time constraint. So let's go to 27th of November. See, I got stuck here on 1st of January and it is not going away. So what I'll do, I'll press one more one here. So make sure that we are in the 30th, no, 27th. So maybe this will take us through 27th of, yeah, this is 27th of November. So I want to take you through that 128.39 on 27th November, what price did around that period. So 27, what is happening? 20 December. November. Yeah. So now we'll go to 27th of, yeah. So we'll go to 27th of November when market opens at 11 o'clock. So if you are not clear when the market opens, what you can do, you can right click and add pivot points to just to show you that actually market when exactly it opened. So you can do pivot points and you can make it daily, and take this out, display only last period, otherwise it will only show you for the month. And then this is the pivot point. What you can do, you can make it like this, and then forget about this also. Yeah, you can we'll talk about that later on. So this is the point on 27th. So this is when it market opens at 11 o'clock. Yeah, so market opened and went up to S1 here, as you can see here. This is support 1. If I change the color, you'll understand. So this is support 1. Yeah, and of course we can see display time S1 and daily support. Okay, and if you remember, our number was 128.39. so what we'll do, we'll draw a line at 128.39. so we'll make it 120, configure horizontal line, and 128.39, because that was the line which was, if you remember, that was the line on the daily. If you don't want to remember, what you can do, you can go to options and go to platform options, and then go to again template options, I think so, and go to general. Is it? Let me find it out. I also forget sometimes. No. General. Yeah, so you need to go to platform options and then go to general, platform options and general, and then click on this one, display objects on different dimensions, and don't want this objects. So different lines, display lines on inferior time frames, display lines on inferior time frames. So if you do this, that line which we drew on the monthly, this is the monthly, if you remember, these are the monthly lines. Yeah, these monthly lines which is here, we actually come and sit on the 5 minutes chart. So again let's go to the 27th November, 23rd November, 27th November, and this is the 27th November, 11 o'clock. Yeah, so this is the point we are looking for. So what happened here, that is the monthly line, if you remember, that was, sorry, daily line, and joining the and this, that was the line which I joined on the daily. So just to show you, let me bring another chart. Yeah, so this was the daily line. If I make this bar chart, yeah, so this was the line, this is the line I'm referring to on a daily time frame. So what happened, it cracked through, closed below low, taken off, good, it went up to S1 daily, and then what happened, this you can go to 30 minutes 1 hour chart, of course you can do that, but just in case your time reach, you can actually go to 5 minutes chart. And this is the close above, so this is the close above this line, and height, if the high is taken out, then we'll be placing a trade here 128.42 with a stop loss of 128.27. yeah, so if you do that, you can see the percentage of gain here. From here, the stop loss was 20 pips, and the percentage of gain was at least 2%. Yeah, so this way, this is another way actually to understand, to draw a line, on the start of a swing low going up. If the swing highs are not going up, or the peaks are not going up, then wait for this bounce here 128.39, or you can wait for the breakout, here at 128.32, breakout here and high taken out. For example, if you are not time reach, what you can do, you can wait for the daily close here. This is a breakout because this swing high has broken this peak of this swing high. So this is a breakout, close above this line and high taken out. So that will be another trade. Yeah, then what happened here is, this is the election day on the 12th, and the exit poll was on the 13th for the sterling. Yeah, so even before the counting of the parliamentary election started, before that, it actually happened at exactly on the 9 o'clock on 13th of December. Market jumped open, and then if you see on the exit poll, that Johnson is going to win, and he's going to do a miracle on the Brexit. So it actually moved up 465 pips. Yeah, so it moved up on the 465 pips on here. Good that you have taken a trade on the breakout or a bounce. So this trade is a bounce trade. So some of our strategy are based on the bounce, and some of the strategies which will be discussed in due course are actually breakout. Yeah, so this concept here is breakout here, and the concept here is bounce here, and this is what happened on the exit poll, and this is happened on the exit poll, and then it immediately came down here. And if you see these two things and you right click here and say what is this, this is the horizontal weekly, it is coming from weekly. So if I have to go there and delete these lines, because that much we have understood. Okay, so have you understand, do you understand how to actually take advantage of market at any time, whether it is today or tomorrow, or before or after? How to take advantage of? We started with the morning star here, We started with the morning star, as you said. We started with a double bottom, as you said correctly, with a double bottom, as we said correctly, double bottom, and the target is reached here. Target somewhere is reached here, and then we also started with. We can also start with the 200 moving average, 200 moving average here, not a cross. So this is a 200 period moving average here, and then the last one was the when the swing low started getting up, then we joined this line to take a bounce trade here, or we waited for the peaks to go up, and then we this one here, and we took a breakout trade. So all these are clearer, and so far so good. And then what happened? So after all this 1 2 3 4 1, let me identify, let me write down so that you remember. So first thing, as I write down before, so first thing is the candlestick, second thing is the double bottom, and the third thing is the 200 EMA, yeah, and the fourth thing was the trend line. Yeah, so we started with candlestick, then went to double bottom, then to 200 moving average, and then to trend line. So trend line can be actually bounce or breakout. Yeah, so bounce or breakout. So far so good. We have done this much, this many things so far, and before that of course we did the uh, basics. Okay, so if we have done this, then we saw this. So when price was going up, when price is going up like this, we want to know how far it can go. Of course we can take advantage of our uh, Fibonacci, or else what you can do, you can go to weekly, as I did in front of you, and then just start identify the swing highs or the peaks. So 211.61, then 203, 201, 186, 171. As you can see, I have just 159, 150. I just identified the swing highs 143, 134, 133. So if price is going down, going down, then probably will stop. The price will stop here 102. Or since it actually after the Brexit, all the referendum, all those things, it came down from 171 to 118. Yeah, 118. I think 118. Yeah, this is the one which is 118. Yeah, exactly, 1.18000, and then it made a higher low. So then it made a higher low from this. So this is not a double bottom, but a higher low. So recently we talked about this one, and when price started going up on a weekly, and this is the swing, this is again a double bottom here. So this is again a double bottom here, and it broke the, it can break one, it can break one, it has broken one, it cannot break two, it can break two. So yeah, so it has broken two. And then the 200 period moving average in the weekly may help, may not help, but don't rely too much on that. It sometimes it helps, actually it did this time. But swing highs are important here. So this was the target. If we are going up, how far can we go? So this is the 3382 coming from the weekly swing high, and then 134.72. So going back to our daily, so when we were here on the election, just after that, the exit poll and the thunderous win of Johnson, it went up to 465 pips, and but it got a double resistance. So it got a double resistance, and this is the zone of resistance. This is the zone of resistance, and this 134.73.5, it managed to close above 134.72.5. As you can see, this close on the 12th of December, on the 13th of December was 134.73.5, which is higher than the 72.5, but the high was not taken out. So this is a crack and snapback. So the high was not taken out, so this is the immediate case of crack and snapback. So crack through the support and snap back through the support. So if you remember, crack and snap back. So one more thing I'll add now, because the fifth thing which is happening after all this thing, is the previous resistance. So in this case it is resistance weekly, and then of course it is coming from swing high, no point, yeah, swing high and previous resistance, and then last thing happened is a crack and snapback. I'm only explaining what is happening and how it is matching with our understanding, how it is matching with what we discuss. Yeah, so what we discuss on the instruction based discussion, or through our asset class evaluations and so forth, or through our strategies. Yeah, so it did an immediate crack and snapback, so I'll go and write here. I'll write down crack and snapback. S and MP, yeah, crack and snapback. Crack and snapback. Yeah, and the next thing is this low has to be taken out. So if you are shorting this market, this low has to be taken out because this is an example of a crack and snapback. That's why we always request you to actually do the practice task as much as possible. So if you actually do the practice task, what happens is, you know, the success rate of that crack and snap back and double bottom and double bottom, double bottom and double top and all, and head and shoulder, all those things. So if you are actually very confident that yes, this is a pattern crack and snap back which is successful very high percentage of the time. Yeah, so if you are very confident, you can take a trade here. Then you can end close below this line, and then lower needs to be taken out. Yeah, low needs to be taken out. So we wait for, this is the low taken out, so we are in low taken out and crack and snap back, and it came down and trying to play on this swing high, but it closed below and again low taken out, so actually it is gone, and now it can crack and snap back again on that, or it can bounce from this here. Let's see. This is a beautiful thing because this happened on the line which you have drawn on the 25th of November. After this swing low is formed, 25th of November we drew this line, and it got a support here on 27th of November, and again here on 23rd of December, only last week, we got a all sellers out. So the last, again we will go back and write down to our understanding that these are important, and these will be important for the rest of our trading life. So candlestick, and then double bottom pattern, and then 200 moving average, and then trend line, breakout and bounce, and then previous resistance, swing highs, all in front of you, and then crack and snap back, and then all sellers out. Yeah, so this is the last one we are talking about, all sellers. Can it come up to 200? Of course it can come. Then it has to close below this line and then low taken out. Let's see, but in this case it is a all sellers out bar here. So we have discussed so far 7 very important concepts. Do you have any questions? Please ask questions so that you know I know more or you know more. Please write. No question is a simple or vague questions. All questions are important. I'll give you 1 minute. Please type in your questions. Any questions related to anything what we discussed so far? So this is the thing I was referring to. pattern. These are some of our students have done this. So this is on the monthly, this is on the weekly, and this is on the daily. What he has done, he has written down the patterns here: head and shoulder, reverse head and shoulder, double bottom, double top, wedge, triple bottom, triple top, crack and snapback. So this is a crack and snapback which I was referring to. And he got and against each of these currency pairs: yen, Aussie, sterling, euro Aussie, euro CAD, sterling Aussie, sterling Swiss. That's why I say this will never change. He got a success rate of 74%, which is very high. Yep, this is very high, 74%. Then he got a success here on the reverse head and shoulder. That means it is reversing the downtrend. 71. Crack and snap back, 74. So if you have got a satisfactory results of crack and snapback on a daily chart, which is 74% success, you would be definitely taking that trade, taking this trade, crack and snapback. Yeah. So after that, what happened? This is all sellers out, and then yeah, again a possible harami type of thing. So if we do this, change this to candlestick, it will look like harami or a possible morning star. Yeah, so as of now this is a harami, and the next bar can be a morning star. And see the strength of this line, and I have not changed this. Of course you can change this, but I don't prefer. You can move this line from here, sorry, you can move this pointer from here to here, and in that case it will not, it will be it will not, it will be exactly stopping here, it will be exactly stop here. But if we don't do that, I don't do this, I just keep it here, so that I see the all sellers out, and then harami, and then possible morning star. Let's see, and indeed it was a morning star with a gap. Yeah, with a gap. So this is a gap which is the breakout gap. And what did it break? If I say a breakout gap, so what did it break? It break this first term downtrend, no? First term downtrend. For why I say first term downtrend? Because the highs are coming down and the lows are coming down, so this is there's no peaks and drops, just the immediate trend is down, and it broke that immediate trend with a gap. So in that case, we say it is a breakout gap, because the close here was on this bar candlestick was 129.48, and the open here is 129.70. So there is a 21 pips gap here, 21 pips gap here. So till you can wait for this had to be broken out, or this swing high, or you can take this as a harami or a morning star, or even you can buy here, because all sellers out, depending on the success rate of your pattern identification. And then yeah, so this we can enter here or here, and so on and so forth. So if you have entered here on the 24th, how many opportunities in the recent 10 days or 15 days you got after drawing these two lines? Because this is the starting point, because the peaks were not peaks of the swing high was not going up. So we joined this swing lows, and we got the first opportunity here and the second opportunity here. So the first opportunity here on the 27th November on a bounce. So this is a bounce trade, as you can see, this is a bounce trade, and this is a crack and snap back on the 13th of December, and this is again all sellers out on 23rd of December. And so now that we are seeing this, what is the last discussion? We cannot last, but what we can do actually, if it is going up, how far it can go. So we'll take advantage of a Fibonacci. So what we'll do, just to make this a little bit clearer, what I'll do, I'll go to platform options and take this out, inferior time minutes. Remember that, so that was an weekly resistance here. Yeah, so the last trade we got here, if got here, and then we'll ask what is the how far it can go, So in that case, what you will do, we'll take advantage of the Fibonacci, and we'll go now supposing we are here and we are running a profit here, so we'll be asking, should we close it, should we close it, close, and so on and so forth. And now with the 76 pips risk, we are getting 289 pips profit. Should we close, what do you do? So to get rid of that panic, and what you can do, you can take advantage. Supposing we are here on the 31st of December. I don't know how many of you saw this market. This is a fantastic market on 31st of December. So when you are on this 31st of December and eager to close the trade, what you can do, you can close, you can actually wait for the Fibonacci. So you have drawn this Fibonacci from this swing high to this swing low, and take the one which market did not respect. So 23.6% taken out, 38.2 taken out, 50 taken out. So it has exactly touched the 61.8. So if I take the 78.6 taken out, 88.6 taken out, and I don't need this, I only need price, sorry, I only need percentage and the oblique line, so that I know where from I have drawn. Yeah, so if I do that, so it is exactly stopped at the 68.6. So if you really want to close the trade, then you can close the trade here, because the kind of all buyers out. Yeah, so if I change this to bar chart, it will look like a all buyers out at a resistance. So if you are entering here on the if you are entering here on the all sellers out, you can close the trade on the all buyers out at 316 pips profit. Yeah, you can close the trade here, and the balance we are now here. Okay. So far what we have discussed, exactly starting from the beginning of the beginning. We started with the definition of a base currency, the nomenclature of a currency, or what does GBP means, what is a base currency, what is a term currency, what is their relationship. We discussed about pip cost, converting them and into profit, and so on and so forth. And after that we talked about where to get started. We talked about either candlestick or a pattern like double bottom or a 200 moving average. And then after the start, how do I continue? The best way to continue is to observe the peaks and drops. If the peaks are not going up, draw a line when the drops or the swing lows are started going up, and then take the bounce trade. So that's what the bounce trade was here. We can write down here the bounce trade. The bounce trade was here, and then the all sellers out here, all sellers out here, and this is the Fibonacci all buyers out. So Fibonacci all buyers out. Yeah, Fibonacci resistance all buyers out, all sellers out at a support, which is this trend line. And so we have discussed the 8 critical concepts of the term. If you are in the new year, if you are actually struggling to remember some of the things which I studied 3-4 years back, because most of you are with me 3-4 years. So if you have forgotten that, then we have discussed everything in almost last 80-90 minutes. Yeah, do you have any question, or just think of questions, and please type in. I'll give you 3-4 minutes. Type in as many questions, so that if anything is unclear, we can discuss, go back and discuss. You can write down, or you can talk back, unmuting your mic. Yeah, We got the question exploring. That's good. So Lisa is asking, given that the last peak is lower than the previous peak, are you inclined to still go long near the blue trend line if you see the right bars, for example hammer, morning star, etc.? Okay, brilliant question. So what she is asking is, for the moment, if we delete this Fibonacci, yeah, and then so what she's asking, given that the last peak is lower than the last peak, so which is this one, peak can be, yeah, swing high as well. The last peak is lower than the previous, so this is lower. Don't forget that this is uptrend. Yeah, this is uptrend, and in an uptrend, before answering her question, in an uptrend, if we see a flag like this, if I join this and extend this, if I see a flag like this in an uptrend, if this is a flag, then what does it say? A flag in an uptrend is what? Continuation or reversal or what? Please type in your answers. Continuation. Yeah, Elisa says continuation. So yeah, brilliant. So if that is the case, then I'll go back to her question. She's asking, given that the last peak is lower than the previous peak, like this one here, are inclined to still go long near the blue line, like this one here, trend line? If you see the right bars, for example hammer, morning star. Yeah, so if this bar, that's a very good question, thank you for that. If the next bar, like tomorrow's bar, yes, Selvan is looking, writing wait for long signal. Yes, so what if this tomorrow's bar, let's say this, draw a virtual and I always draw these lines. Yeah, if the tomorrow on the segment, I'm preparing the segment for the close of this bar. Yeah, that is done. Sure, take this out and make this. Alright, so if if this tomorrow's bar actually look like this, tomorrow's bar look like this, with a close, with the open here and the close, so that can be again all sellers out, so if you are a risk taker, depending on the risk you are taking, so if you are a risk taker, then possibly you can buy here, or if, as you said, wait for long signal. So you don't know whether the next days would be couple of down days, we don't know. But if you're a risk taker, if I'm a risk taker, or if you're a risk taker, as we bought here on the sellers out, we can buy here. Or if you are not a risk taker, you are a risk averse person, like if you do not enter here but you enter here, and if you do not enter here you enter here, and if you do not enter here you enter here. So in that case, what benefit, there are pros and cons. So if you enter here and then you see the next day bars are like this, and the next bars are like this, and so on and so forth, so better to wait for a reversal. So for example, if this bar, yeah, many of you have actually written down, like if this bar is a hammer, if this bar is a hammer, or you said a hammer, morning star, etc. Yeah, so if this bar is a hammer here, and let's make the color so that it looks like a hammer. Yeah, so if this bar is a hammer, preferably closing above the line. So if this bar is a hammer, preferably closing above the line, so this bar is close above, and the line was here, line 129.91, so 129.93, let's make it 129.93. so it closed above the line, then the next bar is again a morning star, like the morning star. So this bar looks like a morning. So if this bar, next bar is a morning star, then possibly you can enter here. You can enter here. Yeah, you can enter here. You can enter here. Yeah, if that is your question. The advantage of entering at the close of the all sellers out, if this happens to be the bar on the 6th of January, is we are having a least risk. That means what? The reward to risk ratio, the reward to risk ratio would be more if we are taking a risk here on the all buyers out. If not, we are waiting for the confirmation, then the reward to risk would be not as good as this one. So yeah, both are true. So this can be like this. Otherwise, if it is not so, then what happen is this fellow actually. So the advantage of waiting for the candlestick reversal is the possibility of getting stopped out is less, but the reward to risk could be not that good. But if this, if next day, if this is a bearish bar, next day is a bearish bar, next day. Forget about. Just take this out. Take this out. Alright. So the next one is like this. Yep. And the next one like this. So what we are looking for is, there is no segment here to draw. That is that means the arc. You cannot draw a free hand, but at least you can try. What we are trying here is we are trying to extend the 200 moving average. So we have extended the 200 moving average. So if it is not stopping at this trend line, at least if it is stopping on the 2-3 days in the 200 moving average with all sellers out, with all sellers out, all sellers out, with an all sellers out, then in that case again it will be the same thing. Either if you want to take a, if you are a risk taker, then you've taken a risk here, got stopped out, again you can take a risk here and again get stopped out. Doesn't matter. So but you can take the risk here with the 200 moving average, all sellers out, or you can wait for a hammer or a morning star here to go long. Yeah, very good question, excellent question. Next question. Similar, if you are thinking of the questions, I'll give some more time. So what like this one here, you can take actually anything. For example, if you go to EuroCAD, just a random, if you go to random EuroCAD and you do this, where do I start, what to do, my goodness, see I've already given a buy signal here. Okay, so what I do, this is so if you see, if you why I have given a buy signal there, uh, because if you happen to see this, this is a double bottom here. That's what that's what I told you at the beginning of this discussion, that doesn't matter what currency, doesn't matter what instrument, and so on and so forth. So this is a double bottom, and after that, but this problem with this double bottom is the high is not broken, as you can see here. The high is not broken here. It actually falls break, crack and snap back, crack and snap back, crack and snap back. 3 crack and snap back happened here, but this is a possible opportunity. Why? Because not only because this is a double bottom, but also see this EuroCAD. Yeah, see this EuroCAD, my dear friend. So this is a so if I draw this line here, so one we got a support 144.43 on 13th of September, one we got a support of 144.78 on 21st of July 2017. So this is zone of support. It's zone of support, and then we see a hammer, kind of, not a good one. Why I say kind of? Because uh, it is having too much of this upper weeks. Yeah. So this is, if we are a candlestick, this is a harami in front of you. This is a harami in front of you, and a morning star in front of you. Yeah. And this is a hammer in front of you, and this hammer actually coming from the previous support 144.78. If you remember the previous 44 2017, this is 2017, and this is new support 2019. So this is zone of support, and this zone of support can be represented as drawing a rectangle as a zone of support, and this is a hammer here, and this is a harami, and price went up, hammer, price went up, harami and morningstar price went up, and this is not bad. If you take this harami here, the this is 214 pips against 61 pips, or if you go up to this point, 88 pips, 3%. Yeah. Then quite not, price did not come up to this point, the price did not come up to this point, price did not come to this point. So what actually happening there was price actually stopping at a Fibonacci level. So if price is not coming here to the zone, what do? We know another instrument in our arsenal is we can draw Fibonacci from this point to that point and wait for the reversal from a Fibonacci support point. In this case it is 61.8, I think. Yeah. So 61.8 is the 61.8. Yeah. Don't take out this 78.6, take out this one. Yeah. So it got supported here. And what was the, not only Fibonacci is not enough, but at least harami, so, or a candlestick. This is harami, this is harami, this is harami. Yeah. So harami again, this is a hammer. Again you have to draw that candle Fibonacci from this point to that point to get a support, to get a reversal here. All right. So if price is stopping there, because this is a range, this is a big range, as you can see, from this to this is a big range, not yet broken. The 3 times it tried, 1 2, it had a, it having a dark cloud, it is having a it is having a bearish, what is that, engulfing, and it is a harami as well as a evening star, yeah. And then it is not broken, this time also not broken, it is having, it is a bearish engulfing, as you can see. And if you remember our candlestick discussions in our asset class, instruction based discussions in the candlesticks, we talked about this range market. How many of you remember that? Say yes, no. Yep, Kim says yes. Fantastic. Lisa says yes. Fantastic. Brilliant. Good to know that you remember. Yeah, that is fantastic. Yeah, very good. So this is a candlestick, exactly what we discussed in our instruction based discussion, exactly same. And with that we discussed 10 years back, but now it is happening after 10 years. That's what I said. After 100 years also it will be the same. And we are this is a this 61.8, this 61.8 again gave us possibility of back to back harami. This is harami, this is harami, and this is bullish engulfing, this is bullish engulfing, here. And now we are here, a possible hammer. Sorry to denote bullish engulfing and bearish engulfing as BE. You know, resistance it is bearish and support it is bullish, and harami and hammer as H, just to save time. Yeah, so this is a harami, of course, but not a quite a bit hammer. So this is a possible opportunity to go long as we speak. So this is not hindsight, because we don't believe in hindsight. So whatever we discuss is as of now. So we discuss sterling, and now it is EuroCAD in front of you. If you have any other currencies to discuss, or any commodity or any shares to discuss, please let me know. Or if you have any question, please write down. Otherwise, I think we have done enough for today. Okay, Lisa is asking, if you are too long, would you put stop loss below the lowest drop in that zone of support, or just under the hammer? Yeah, brilliant question. Yeah, so she's asking, if we are have to going long here, then where to put the stop loss. Don't put the stop loss on the low of this hammer, which is 144.50 minus 10. Go up to this 144.16 and minus 10, 144.06, or even 143.96. That's a brilliant question. So my stop in this case would be this low, which is 144.16 minus 20, just to be in safer side. So 1.4396. So I'd go 90. I'd go 90 just to be in safer side. I think we have given a trade call on this. If you see the trade idea section. Yeah, I think we are going to call. Yeah, EuroCAD 145. See, I was writing 143.96 exactly. It is written here. Long 145.53 when this high is taken out, because the high is 145.022, and then the stop loss is 143.96. Yeah, below that. That's good. Very good question. Yeah, next question. Isel is asking, can we look at Aussie quickly? Yeah, so let's see Aussie quickly. And before that, I just wanted to capture this. What is module 3 unit 1 page number 25 22? Module 3 unit 122 is exactly matching with EuroCAD as of now. So 10 years back this was captured, and now 10 years back same, exactly same. Range market, candlestick. Yeah, range market candlesticks. Brilliant, fantastic. So that's what I say, it will never change. People ask me whether this pattern will change every day, every minute. Not at all, because what we wrote in 10 years back exactly matching here. All right, Aussie. So next question was for Aussie. Let's see. You have to delete this, because otherwise the software is limited, and it will say you have so many symbols. You need to delete it. Okay, before you move forward. That's why I deleted. Sorry for that. Okay, I'll go Aussie. Okay, Aussie. Where to start, you know. How to start, you know. And what do we do? Let's do from the right hand, last one here. So what we are seeing here, it is above the, we saw a triple quadruple double bottom, and double bottom, back to back double bottom. Always do this. I always do this just to have the reference. Unless and until you do this, you don't have a reference. So no matter what time, what 12,800 or it is 88 or 108, doesn't matter. Always look for a starting point. Yeah, where exactly is price started to moving up or moving down. From here it went up, because from here it broke one, it broke two. That is the ninth concept. It can break one, it cannot break two. But if this is a double bottom, then it can break one, it can break one, it can break one, it cannot break two. All right, so let's see. This is a double bottom here, and it price is going up, as you can see, because the peaks and troughs are going up. So this is uptrend. One more thing you can do, you can quickly draw this channel here, and that is a channel yeah, we have discussed separately. And then in the and then what you can see here, this is a uptrending channel, and we are having a why did I give an arrow here? I think yeah, I'm considering long here. Yeah, I'm expecting a bounce from this 200 moving average, or uh, I must be having some reason to do this. Okay, let's do this. Yeah, I think this one, this is the reason. Yeah, 29.39. This is the last peak which is broken. This is the last peak which is broken by this peak, swing high, and this fellow, 3rd of January, last Friday, did not close below 39. 69.39. Yeah, so what we can do, again we can go to options, and then platform options, and then general, and then do display objects, just to have this line on the month, on the chart. So I go to the 1 hour chart, not 5 minutes chart. So what we will do in the okay, before going to 1 hour chart, let's do a little justice to the Aussie. Yeah, Aussie is going up, not very strong, but at least it is going up. But if we consider the big and double bottom, as we saw here, that was not quite, did it happen on the bottom right hand corner? Let's see. Yeah, it did. Yeah, so it tried to do the double bottom here. At least we can do this. If that we are not interested to that big double bottom, we can reduce this. Yeah, you can reduce this. This is a double bottom, but I prefer that one because that low was lower than this. Yeah, and we in between we have a swing high, so it can break one, it cannot break two. So if we consider this as a swing low, this is a swing low, so the second swing low is lower than the first swing low, and in between we have a swing high. So that's a swing high, and that's a valid double bottom. Only thing is that this high has to be broken. So this is first high. It can break one, it cannot break two. So this is one. So this is one, and the second one is here. Not 32. Second one is here, and then the second high is here. So if it has to go up, it has to break 68.94, and then it has to break 70.82, because in between this and this there is no swing high. So it can break according to our principle of it can break one, it cannot break two. So let's wait for 68.94 to be broken. Yeah, it broken. Close above high taken out. Very good. The problem with this very good break of one is, of course, it can start the trend here, but immediately we had a 200 moving average. That's a beast. So before going up to 70.82, it can actually get a resistance at the 200 moving average. Let's see what happened. It played with the 68.94, and it is coming down. On this date, what you can do, if you remember last 1 hour discussion, when the top started going up, you have to draw this line. Yeah, and just the one we drew on the GBP USD. So when the top started going up, we have to draw these lines, not this one to this one, but this is the first higher low, the second low, higher low. So we join this here. Let's see. Joining this is meaningless actually. Okay. So now that we have a crack and snapback here, we may go long here, or in the meantime we can join the channel, this channel here. So if we join this channel, and if we are here, it will look like this. Yeah, it will be a dynamic channel, it will change automatically. And we have and this is a all sellers out, and this is a piercing. This is a piercing here. That was on the 26th of November. And this is a crack and snapback. Even the all sellers out piercing did not help, unless and until we are managing the stop. So if you are entering here, the stop loss of here, you survived 53 pips. Yeah, you survived. Otherwise, it is a crack and snapback. So this line did nothing. Market participants did not respect, so we delete. Here we cannot be egoist and keep this line. No, delete this line because it did nothing. Alright. So now what is happening is it is crossing the 200 moving average twice. It did cross a crack and snapback. It did cross and high taken out. So considering this strength of close above and high taken out, we can expect either at 66 69.39 bounce, or we can go and do a Fibonacci from here to here. Always do that, because the right hand side is unknown, so better to take all our tools whatever we know. Yeah, so now that we have 50% and previous peak 69.39, and we have all this at around this 69.34 and 69.39. So what we can do, like we did for the sterling, I presume, we can go back to 1 hour, and then we can wait. This is already a crack and snap back on 69.39 on 3rd of January, which was Friday, last Friday. So already a crack and snap back, but problem is it again did a crack and snap back on the 1 hour 200. So what we can do is you can wait for this fellow to come down and then reverse. If it is reversing on an hourly basis, then we can go long here, if you are having time, if you are a time rich. Otherwise you have to wait for this daily to have a bar, which is possibly this is not a all sellers out, this has to come here, either a harami or a hammer, then possibly go long, unless and until it is cracking through and having a horrible bar like this. Not horrible, good for short. And closing here below the 200 moving average, then it will be entire scenario has got changed, because 200 is very powerful, and if it is closing below the 200 moving average, then the entire scenario is changed now. Did I answer your question? Do you have any last minute questions? Fantastic, brilliant. So all your questions are answered, or do you have any other question? What I tried to discuss basics of trading, 3 months trader foundation, and a part of 6 months. 6 months from so I have touched one module and one unit here. So almost 4 months of discussion I have tried to make a refresh on the start of the new year. Sally is saying that I'm looking to long it. Yeah, that's good. No more questions. And I took the previous up run. Oh, brilliant. So you got long from here. Where did you enter? Which what was your entry point, Sylvan? Did you enter on 19th of December? Because you wrote.
1 second, I'll tell you.
Yeah, no worries. He's talking now. He said 1 second. He will check his journal. No problem, Bankim. Talk soon.
The 19th, yes.
Yeah, 19th. You took this trade on 19th, and when did you close?
Yes. Oh, when it turned.
Yeah. Brilliant. So you enter here.
At 31st.
31st. Oh, brilliant.
Yeah.
So you entered here, and then you closed here, 109 pips. Yeah, brilliant. Very good.
And then I went short.
You went short?
Yes.
Yeah, this is overextended, isn't it? This is absolutely overextended, because it is beyond this. And then you go started from this close or low taken out?
No, I went short and I closed it on Saturday morning.
Fantastic. Good job. Very good job. Excellent. Good job done. Any other question?
No more questions for me, Papa.
Fantastic. Thank you so much for your time, understanding, and questions. I really enjoyed this. And then you have a great trading year, and we'll talk in whatever your sessions like. Thank you, and bye for now.